All right, I'm with Dylan LeClair, head of market research over at Bitcoin Magazine. Uh, you can also find Dylan at BTCization. That's BTCization. Dylan, thanks for coming on, man.
Yeah, of course. Thanks for having me. I'm excited to chat.
Yeah, really appreciate it. So we're live on multiple platforms. If you guys have a comment or question, feel free to jump in. Would love to hear from you. We want to make this pretty much like Q&A, but also learn more about Dylan, kind of his journey in Bitcoin. You have a really awesome story of kind of how you landed over at Bitcoin Magazine. So you just recently turned 20. I want to ask you, when you told people around you, maybe especially people that are no coiners, that you were going to go full time into Bitcoin, what was their response?
Yeah, I dropped out like last I don't even know. I think it was like last May I decided. And I did it because I realized the opportunity cost was Bitcoin. So like I needed like
Mhm.
whether like that was, like I couldn't, even though school wasn't that expensive for me, like I mean I got good grades and everything. I was a good student. I enjoy learning, I enjoy school, but I realized that, if I'm gonna price my time and I'm gonna price my education, I gotta do it in Bitcoin terms. So I realized I needed to drop out, and I did, and I picked up a job, just not even a Bitcoin job. I picked up just like physical labor stuff. Did electrical work. Did family has maple sugaring operation, so I was walking around pulling taps, all the while just like listening to podcasts and learning on the side and whatnot. But you know, definitely was interesting when people were like, "Why?" And I was like, for Bitcoin." They're like, what? Like it looked like, have you lost your mind? And so yeah, I mean, it turned out all right. Got a job at Bitcoin Magazine like this March, part time, and kind of worked my way into the role I am now, which is doing like head of market research, doing kind of the all the content for the premium product, the deep dive. So we cover like global macro, on chain analytics, and like Bitcoin derivative markets. Um, and so yeah, I mean, really enjoying it and love the Bitcoin community, and just kind of spending all my time around this, this space.
Yeah, love your content. Love all the threads you put out. Um, you start making content like early January, February? Start posting?
Yeah, I mean, I was like kind of like a shit posting like Twitter and on, to be honest. Like I just that was I never like was planning to do content, even though I had a lot of things I wanted to say. I didn't really know how to express it, or if people even cared enough. And I just started posting a little bit more and a little bit more, and yeah, around like beginning of 2020, started to really like I had all these like thoughts in my head and like theses, about the debt cycle and all this stuff I like would be thinking about every day, but not really like never. I put it to maybe put it to paper, but never really put it out there for everyone to see. And decided like, hey, like maybe I'll just share my thoughts. And people started to reach out and share, and got some good feedback, so kept doing it. And kind of snowballed into a job, which is can't complain about that.
Right. Um, you have a lot of great pieces out there. I'm going to post the link so everybody can get to it. But the one that really stood out to me was the conclusion of the long-term debt cycle and the rise of Bitcoin. I watched you and Greg Foss on what Bitcoin did with Peter. That was awesome. That was really awesome. If you guys haven't not listened to that, you got to go back and watch. What's on YouTube too. You can watch it. That was a great conversation. What was the motivation to write that article?
Yeah, I just and so I mean I would paying attention to Bitcoin before 2020, was went to school for finance and economics. I mean technically it was business, and we had to wait to pick a concentration till like junior year, so it would be next year. For this September would be my junior year if I didn't drop out. But I mean I that's where I kind of approached Bitcoin from, was like I understood it was a technology, like crypto more broadly. I was just open to the idea, being a 17, 18, 19-year-old kid. And I really started to dig into it more, and read like the Bitcoin standard, and kind of started to pay attention more to like the macro picture of like, all right, what, like equity markets are up and to the right, right? Like everything's up and to the right. Why? Like what is going on here? And started reading about like, I started reading Ray Dalio and his theses and stuff, and like why is value investing underperformed for 2 decades? Why, like, what is this debt cycle? Why is what causes a recession? All this stuff. And I read Ray Dalio's long-term debt cycle like thesis, which is essentially, and we can dig into it, I guess, but um, it just kind of I put two and two together, or like, more than two and two, but Bitcoin kind of being this monetary bearer asset built for the digital age, and kind of, the role that gold would traditionally play in the end of a credit cycle, where, it's either the central banks monetize everything and print currently trillions, or let everything go bust. Bitcoin is like the solution to that, in the way that gold used to be 100 years ago. And so when I kind of really put that together, I was like, okay, well, this is kind of my thesis for owning Bitcoin. I think I need to share it. And I did, and I got a ton of feedback, and, I think I got translated into a couple of different languages and stuff. So that's cool. Got a lot of feedback. It was good to see.
So for the layman person, when you say like the long-term debt cycle, like how would you explain it to them? Obviously, the articles goes very, very deep, and I think everybody should read it. But if you're talking to someone that may have not followed financial markets beforehand, potentially, like how would you explain that? How would you explain the long-term debt cycle to a layman?
Yeah, so I think, to kind of preface it, like, when you're thinking about debt, you have to think, most people think, like, rightfully so, debt is borrowing money from another person. But, in the most basic sense, like, debt is borrowing from your future self. And you're doing that plus interest. So if I'm borrowing $100 from you with plus interest for 5 years out, not only am I got to pay you, but I got to pay with my future productivity. So I'm basically like pulling forward demand. So in the most basic way, like, debt is cyclical in the fact that whatever you consume now, that added consumption, you got to pay it down later. And so, if that debt's used productively to increase my future income, then it's good. That's a good thing. You get paid plus interest, and I get an increase in productivity. It's a win-win. But oftentimes, especially, in the mid to late stages of an upswing, of a credit boom, meaning, there's more and more lending happening. Assets are increasing in value because the money supply is increasing because of this lending boom. People use debt for non-productive things. So, for example, if I buy a car on credit that I can't afford, or, that I really shouldn't be buying, might feel good now. I might have a really nice car, and I might be able to afford it. But later on, when all my debt comes due, and I got all these bills to pay, well, that car, even if it's worth nothing in 10 years, I still am paying down this debt. And so in that sense, that's just an individual level. That's like kind of an example, but you could think of that same kind of thing for a whole economy. And there's like, everybody, or most people, have kind of a basic understanding of like a recession, right? Like, oh, every 10 years there's a recession. Well, why? Does the world become less productive, once every 8 to 10 years? No. It's just that the recession and the business cycle as we know it is really just driven by a credit cycle. And so where debt to income ratios rise too high, and eventually they has to be paid down. And when you can think of it like, one person's income is another, or one person's spending is another person's income. So when I have to stop spending to pay down my debt, well, someone else's income drops, and when their income drops, their debt levels are higher. And so they have to stop spending. And it's just kind of on both ways. On the way up of a credit cycle and the way down, there are these kind of self-reinforcing cycles. It's like reflexive. And so, if you just look at a chart of interest rates over the last 40 years, we saw in 1980, they were at 20%. And that was, there was big inflation or whatnot. So Fed Chair Volcker had to raise rates, but rates were at 20% in 1980. And so over the last 40 years, what we've seen is there's been an increasing amount of debt and kind of leveraging up. And every time that debt servicing becomes too large, well, what does the Fed and other global central banks essentially do? Well, they cut rates. And so the price of money is lower, and those debt servicing is easy. The debt is easier to service. And so we've kind of been in this secular 40-year asset boom. One, because of, productivity's increased and we've had all this technological advancement, but two, it's kind of this like financial, not financial engineering, but the cost of capital has gone from 20% to zero. So, accordingly, all asset values are, if you have a house that you're paying a mortgage on, if the mortgage is 20% versus if the mortgage is 2%, that house value is a lot higher. And so you can think of that occurring across the entire economic system. And so every time there's been kind of a bust, an asset bubble, or a debt bubble that's burst. Well, central banks, the Fed especially, have responded by cutting interest rates, and so that's happened 5 to 6 times. It happened in 2000, happened in 08. It kind of just happened in 2020, and now we're at this like zero lower bound. We're at this place where interest rates can't be cut anymore, and so that's why we're seeing, to make up for it, central banks printing money at an aggressive pace, because their main lever to kind of stimulate the economy is gone. That's the interest rate lever, and so this is kind of, we're at, in the article's title is the conclusion of the long-term debt cycle. We're kind of right there, and we're living through it.
Yeah, and you go back to, you talk about cutting interest rates and some of the levers that they can pull. Obviously, in Q4 2018, they try to increase the rates, and you saw what happened. You go back and look at those charts. You go look at the NASDAQ. Look what happened. What, down 20%? The fit that the market threw. Yeah, exactly. It was like the worst quarter ever, right? So you've seen the reaction, especially the last like 6 years, when there's even like a sentence that the Fed says, throws it, the markets throw hissy fits. That's why everyone's so up in arms about, what's every sentence and what they say and the words. And obviously when they raised rates in the Q4 2018, the market just completely hated that, right? Because it changed the landscape of everything. And so they had to reverse course. It was within like a few days. So I always found that interesting.
Yeah, totally. I mean, and that was because like credit markets, I mean, everyone looks at equity markets, and rightfully so. It's more interesting. You can buy your favorite company, but really what's driving all this is credit markets. And credit markets are kind of what like Greg Foss will say, like it's the dog, and like the equity markets are like the tail, like the dog wags the tail, So credit markets were what was going to melt down in 2018. It was like you have this giant corporate debt bubble. Well, really, currently it's like an everything bubble, but in particular over the 2010s, following the great financial crisis and housing and all the mortgage-backed security junk that blew up, what you saw was like the Fed cut rates, they're doing all this QE. It basically was a big incentive for every company, or like, ones that were cash flow positive, to lever up their balance sheet and buy back their stock. And like you saw that at a massive scale. And so, I mean, they did more than just buy back their stock, obviously, but you saw where like the 2010s was a massive increase in corporate debt. Well, okay, that's fine, but that has to be serviced. And so when Fed tries to hike rates, well, all of a sudden that debt is much harder to service. That debt's much harder to roll over, and that's the key.
More expensive.
Sure. And you can lock in your bond offering for 4 to 5 years, but eventually, most debt, it's not paid down, in principle. They just try to roll it over. And the trend over the last 40 years is that debt's always increasingly easy to roll over. It's increasingly, lower rates, or at least the same. It's not too hard to service. Well, that trend reverses with the Fed raising rates, or if liquidity tightens up, right? Because no one wants to lend because, well, it's risky to lend. And right. So you see the Fed and other central banks increasingly, like the Fed bought corporate debt against their mandate through kind of a loophole in 2020 to ease financial markets. This is already happening in Japan, and the ECB isn't doing it directly, I don't believe. Correct me if I'm wrong there, but this is that they have to continue to basically ease markets, or else everything will melt down at a historic scale.
Well, I just saw Germany, their 30-year just went negative, I believe, or just recently, like the last week. And so now, you talk about zero. Well, now obviously there's nowhere to go but negative, and that's where it's went. So Germany's 30-year just ticked down to the negative rate. Yeah.
So like for the layman, right? Well, what does that mean? It means that you pay your government, you lend your government $100 over and say, hey, in 30 years, I want my money back. And there's a time value to your money, right? There should be, at least, you're parting with your money for 30 years and you'll get paid a little bit with interest every single year. And at the end of that 30 years, with all your interest payments, you get a little bit less than $100. That's what a negative bond is. And does that make sense? No, it doesn't make sense. But we have a massive manipulation of the cost of capital and these markets because of central banks. And so, when the bond yields are reflecting a negative cost of capital, well, everything's going to be distorted as a result. You're going to have housing as more people are in a worse place and can't afford it and are about to be evicted because they can't pay their rent, you're going to see housing rising 20%. You're going to see equity markets following like a pretty bad year. I mean, it was with COVID, there was a bounce back and there was all the stimulus, but equity markets are 30% higher than they were in 2020 at the start. Well, why? Are we 30% more productive? No, it's just that the numerator in this equation is like, the dollar or the euro or the yen or whatever it is, they're being debased. And so, that's a hard kind of thing to look from the outside in on and understand what's happening. Like stocks only go up. Well, no, but stocks go up in nominal terms, in dollar terms, when they're, this is an oversimplification, but when they're printing money, right?
Yeah, currency go up.
Yeah.
Right. And then, so you sit up and to the right. So like if you look at any like an Apple chart or whatever, it's currency go up. It's being devalued so that it's pushing the price of the equity up. Right. And so that's what you're looking at now. So the end of this then, because there's a lot to go from here, but so then how does Bitcoin play a role? I mean, I think a lot of us like to say or have the idea of Bitcoin as the escape route out of all of what you just said, because it's from all that.
Yeah. So, in the end of like, so with a fiat currency, right? Fiat currency is created through lending, right? So, and that people don't really kind of understand that commercial banks create dollars, and that's kind of a hard thing to come to grasp with. But if you deposit your money in a bank, they're going to take the $100 you deposited, and they're going to lend that $100. They're going to lend 90 of that, back out into the economy. And now they have a $90 asset, and someone else is left with a $90 liability and $90 cash. And just in this little example, say there's one bank, and I understand there's more than one bank, but just the banking system more broadly, that $90 goes is spent and ends back up in the bank. It ends back up in the banking system. And so now they take that $90, which was lent out of the original $100, and they lend that out again, and they lend out a fraction of it. And so that's what fractional reserve banking is, and they're making interest on all of their lending. Well, what happens is if there is a deflationary event, meaning there's so much debt, and eventually, like I think what central banks are doing now is attempting to solve a solvency problem with liquidity, meaning everybody is up to their eyeballs in debt, individuals, corporates, the government, even though they have a printing press, homeowners. Like think about all this commercial real estate that's levered up that, in 2020, everyone went on Zoom. They're coming back, but is everyone going to come back? No. And so you have all of this debt out there, and a lot of it's bad debt, meaning like the probability that it gets paid or that the borrower is even solvent is like kind of low, over the long term, And so what happens here? Well, if the Fed stopped printing money, if the Fed's, and that's an if, but just in that scenario, what happens? Well, someone defaults, and all of a sudden that default destroys money. The same way that lending creates it. When I can't pay you back that asset that the bank thought they had, or that asset that you thought you had because you lent me $100, Chris, well, that asset disappears on your balance sheet. Poof, gone. And so now you thought you had an asset that's not there, and so you are less likely to spend money. You're less likely to lend, and it's this reinforcing loop where liquidity tightens up, the money supply contracts. You might have to sell your asset that you didn't want to sell to pay down more debt. Asset values are decreasing, and it's this reinforcing spiral all the way down that in the 30s was backstopped by gold, meaning that money, like you had your certificate of deposit, you had your bank note that was redeemable for gold at a bank. Well, today there's no gold. It's just pure fiat currency. And so in a deflationary event, if they didn't stop the unwind in 08, if they didn't step in and do the TARP bailouts and QE and cut rates, if they didn't come in and inject trillions of dollars into the financial system in 2020, well, equity markets would have dropped 90%. Like, and that's just kind of an example off the top of my head, but it would have unwound all the way down. And in that instance, all the banks fail. There's counterparty risk everywhere. Major brokerages and financial institutions are going insolvent, insurance agencies, all this stuff. It's all going to zero. And like that sounds super scary, but that's the truth. And so what are they going to do? Because they can't let it unwind. Well, they're going to print, and they're going to print a lot. The Fed is essentially monetizing the deficit, meaning the Treasury, Congress, they spend $1 trillion. Well, where does that $1 trillion come from? Technically, they're borrowing it, and in a free market, they're borrowing it from the people. So, am I going to lend the government money at 0%? No. Would I maybe think about it at 10%? Maybe. I mean, it depends, but maybe. And so instead, the Fed is just printing the money. The government borrows it, and the Fed just buys it. And it's technically not, they don't do it directly, but essentially it's, the Fed is just handing the Treasury money at 0%. It's, it's like 1% or whatever, but, for the sake of this, it's free money. And so, they're just going to continue to the Fed whenever there's, a deleveraging, whenever there's a sell off, they're going to ramp up the printing because they can't let this unwind. They can't, because, if equity markets pulled back even 25, 30%, real estate goes down, then this whole thing kind of goes kaboom. So Bitcoin, where does that fit in? Well, in either case where the Fed continues to print, or if there's an unwind, Bitcoin is this thing that you own outside of the system that has its own, because the Bitcoin network has its own property rights system kind of built in, where if you hold the private keys, you own the Bitcoin. You don't need to go to a bank. You don't need to ask a government for it. It's through cryptography, through mathematics, you have ownership of this asset. And there's a production cost. So regardless of inflation, deflation, money printing, credit contraction and deflationary bust, there's a distinct production cost to Bitcoin through this, proof of work and through the difficulty adjustment and, this inelastic supply issuance. 21 million Bitcoin ever. And if you want to acquire some, well, you're going to have to convince a Bitcoin holder to give up some, or you're going to have to mine it. And there's like a thermodynamic cost to that. And so in either scenario, whether deflation, inflation, whatever you want to call it, Bitcoin is this bearer asset that nobody can manipulate, that's going to hold and maintain your purchasing power over time.
Yeah, and then Bitcoin, I would say a lot, it insulates you from everything else. It insulates you from the fiat world and the unknown. It's so interesting how, I don't know. I just, when you really, I don't know, when you take in a lot of content, when you start to understand, again, not everything about Bitcoin, it's impossible to know every single detail about Bitcoin, right? So, but if you understand it enough, then other things kind of stand out in the other system, where it's like, man, we give our monetary value to a bank to hold that we have no control over. And that, look, we know what bail-ins are. Go ask people in Greece what bail-ins are. They can take your value like that. But it's like people forget. And that wasn't that many years ago. 2012, was it 2012? And then the banks just take your money, right? So it's just interesting how we're conditioned to be okay with giving our value to someone else to hold it for us, and like you said, that mentioned fractional reserve and what they do with it. And it's just numbers. Yeah. And we can't verify what the supply of dollars are. We can't verify that. So with Bitcoin, you can verify.
Yeah. I mean, like understanding seigniorage and how fractional reserve banking works is one of the biggest, like, world breaking moments, honestly, like you can experience, just kind of understanding the systematic, maybe theft's a strong word, but I don't think it is, that occurs at the expense of the blue collar working class, the people that, 50% of people in the United States don't have assets. And like the United States is like, a first world, one of the most, well-off countries in the world. And we still have 50% of the population that's like living on borderline, not poverty, but like struggling to get by day to day.
50% of, America don't have $1,000 for an emergency. It's like right around half the country,
So the 50% of those people, right? Mm-hmm. If you don't have $1,000, what do you have? You have your time and your labor and the ability to work. And so what happens when the Fed prints $3 trillion? And they'll say, oh, inflation is 2% or CPI is 5% or whatever the hell it is, whatever. But the fact is that when you print $1 trillion and you buy bonds, and so it's not actually inflation because it's nestled in the bond market. Well, you're still printing human time. You're still creating value on a spreadsheet that someone, that the someone working for $10 an hour to put food on the table is still struggling to get by. And guess what? The rent that they wanted, that they were going to pay, or the house that they were saving up to get, maybe one day, dream to own your own home. Well, guess what? That's 20% more expensive for you. And so in some ways, like I look at Bitcoin and like through the financial lens a lot, and I look at markets and whatever, but like at the bottom of it all is like kind of a morality thing. It's like, what is fair? What is right for humanity? And people like may think that's like over exaggerated, but like I don't think that is at all. Like, there's like systematic theft occurring, and it's occurred for hundreds of years. Like, even in the Bible, it's like Jesus chased the money changers out of the temple. Like, why? Because the money changers are like this moral cancer for society. That is like the most insidious like form of theft and slavery, because people don't realize they're enslaved. People don't realize they're being stolen from. It's like, okay, I pay taxes. Yep. No, but the biggest tax is the inflation tax that you don't understand you're even paying. And that's
you don't feel it.
Fixes this.
Yeah, we say it a lot. You do not feel inflation. No one walks up to your door and say, "Oh, by the way, today you're losing, 0.08 of your value," and like sticks you with something. It doesn't happen like that. So if we can't feel it, it doesn't exist, or it doesn't exist to the person that can't feel it. So unless unfortunately, that's what Rich Dad Poor Dad is. It's obviously not a Bitcoin book, but Robert Kiyosaki. That was one of the first books that really started changing my mindset around like 2015 for me. I wish I read it earlier, but it really started changing my mindset. Because you got to play the game. The fiat world, it's a game, and you got to figure out this actually is interesting, because I think with poker and everything else, you're playing a game in the fiat world, and you have to understand the angles to it, right? And so literally, it's all it is. So I think if you frame it as you're playing a game, because they're playing a game against you with all this with all this manipulation of the money supply and things like that, right? So so you can either play the game within the fiat world, right? And taxes, and there's advantageous things you can do with certain assets in certain ways and beat the tax code and be in compliance or whatever, Roths versus 401ks, pre-tax, post-tax, all that great stuff. Or though is Bitcoin, which bypasses all that stuff, in my opinion, right? And this is my opinion. Sometimes I like to simplify things. So you can do everything we just talked about and try to do all this finagling in this game, or just play a brand new game that's fair, that's Bitcoin.
Yeah, I think, with like Robert Kiyosaki's book's awesome, right? And I think the sad, not the sad thing, but like over the last 20 years especially, but like over the last 40 years, like why is a 401k even a thing? Like, why is a pension even a thing? Why is retirement investing even a thing? Well, tax advantage accounts are cool for investing, but like, why does someone that specializes, why does someone that's a plumber need to worry about a basket of securities that they need to invest in to hopefully one day be able to retire comfortably, that they don't understand? Why? Well, because the money's broken. And that's that's one of those things where there's this, what is it called? There's this parable. It's like two fish, they're swimming by and, in this pond or something. And then another fish passes them. He's like, "How's the water, boys?" And they're like, "What's water?" And it's like, that's it. We're all swimming along and we're all playing this game. We're all in this rat race of investing, and everybody thinks they're winning and getting rich, just enough to retire in 40 years, hopefully. And you're looking at these compound interest, these Kager calculators, oh, if I invest X amount of money every year at a 7% return for the next 40 years, and I'll have 1.4 million and I can retire comfortably. And it's like, well, why? Why is that a thing? And it's because the money is programmed to lose value. In a sound money world, and is this idealistic and kind of theoretical at this point? Yeah, but where we're going with Bitcoin, hopefully, is a world where the plumber can focus just on plumbing and being the best plumber in his jurisdiction or area or town or county or whatever it is, and save money, spend a little less than you make, and do that. Not think about anything else. Go home to your family. Not worry about investing in a diversified basket of junk securities packaged by Wall Street, and chill, right? I don't need, I work every day, and I'm talking about investing or Bitcoin or whatever, but you do your job, you save money, and that's enough. And that should be enough. And in a world where productivity is increasing, your money increases in value. not the other way. Like where everybody that's like, kind of quote unquote like successful in today's day and age is like a part-time investor or like, like a financial market speculator, because you have to be, because if you're not, then like you're falling behind in a huge way. Like in a sound money world, not everybody is going on Robinhood or their brokerage account and like speculating on options to get ahead. Like that's just not a thing. Like there will be options traders, there will be stock investors, there will be professional investors, but like, will that be a pastime? No, because you're not going to invest better than experts. But today it's like, oh, just chuck some money in and like stocks only go up, right? Like, but that deep down is like, there's a much, deeper problem there.
Yeah. So you said the money's broken. So I think the next step is CBDC. And I'd kind of like to get your thoughts on how that plays out. Obviously, there's been some CBDCs already, like the concept's already released in China. Man, there was a great, I needed the title of it, but TFTC, Marty just came out with a really great podcast. I think it was yesterday.
Monetary Reset.
Yeah. Oh, it was phenomenal. I listened on 2X. I looked on, what's that?
With Laser Hodl?
With Laser Hodl, yeah. Yeah, I listened to it. I got to listen. I listened on 2X speed. I need to slow it down and listen again. But it was really good for what I pulled from it. But we're in this, great reset, fourth turning. If you haven't read the fourth turning book, sovereign individual, all those things layered on top of each other paints a really good picture as to what's going on. But you said the money's broken now. Just in my opinion, it's this transition into some form of CBDC, which then layers on. If you think the government watches what you do now, you have no idea what's coming. You really have no clue. And I'm not trying to scare people, whatever. This is just the truth. And the level of surveillance that comes with CBDC and the level of privacy infringement that comes with CBDCs. And again, it's not full blown out yet, but they're already the kind of the fiat world is manufacturing the language around it, how it's a reset, it's positive, it's this. So everyone's getting conditioned to start taking and accepting the CBDC. I just want to get your thoughts, like general thoughts around everything.
Yeah, I mean, CBDCs, I'm not too confident that they get it rolled out. I think like, they will, and they is like pretty broad. We're talking about like whether it's the US government or ECB or whatever, but ultimately like there's some pretty big changes like structurally to what a CBDC, how it would differ from a dollar today, right? So like, is a CBDC issued by a central bank? And then we're talking about like, you have people saying like, there's expiration dates on your money. And like, is there like, there's limitations on where you can spend it or where it can move and all this stuff. Like right today, like it's commercial banks create dollars and the central banks can only create, like the Fed only creates bank reserves, right? So like technically, like if you look at M2 charts, people like, I don't know if you follow him on Twitter, Brent Johnson, like Santiago Capital or something. Like he's like the guy with the dollar milkshake theory. And he's like, QE isn't money printing. And he's right to an extent. So like QE doesn't print dollars, it prints bank reserves. And then from there, for them to actually be dollars, commercial banks have to lend. And so, is a CBDC, does it obfuscate commercial banks and their role in this? I don't know. And I don't think they know either. And that's like the thing where I think there's going to be a big power struggle. Like, do the JP Morgans, Goldman Sachs, like of the world, are they full on the CBDC train? Because where do they fit in? And if not, then like, I think there's a chance, and I don't know. But depending on how this rolls out, like, I think there's a chance that we get like some of the legacy system, like on the side of Bitcoin, because with Bitcoin, like it is possible for like commercial banks will financialize Bitcoin. They will build on top of it. And some people don't like that, but ultimately my node enforces 21 million and like you can layer on IOUs on top of it. I don't care. But ultimately, like, the UTXOs are owned by someone. And so with the CBDC, like who creates it? How is like the seniorage, like all of that stuff. There's like in Marty's pod with Laser Hodl talking about the Great Monetary Reset. They know that this debt cycle, like the insiders, if some 20-year-old who likes podcasts and is curious and has a Twitter account can figure it out than like the guys that are 40 years in the system, you know, and are a career banker. Like they know the gig's up, or they know the gig's about to be up. And so a lot of these guys, like these, like, you know, and some people were like, oh, it's a conspiracy theory, but like the families that run the world, or like the families that like have a, you know, a large influence on the world, that, you know what, we probably don't know their names, to be honest. Like these like big legacy, like, you know, central banking, like the Fed has private shareholders, central banks have shareholders. Like that sounds crazy, but it's true. And like, it's like, I think it's literally in like the Fed charter. And so these people that have a lot to lose from like this system crumbling upon itself are really, really scrambling to implement what's next. And I think I just don't have confidence. And this is kind of what Laser Hodl said 2 days ago or yesterday. He's like, I don't have confidence that they're going to work together to make, you know, to all get their fair share, which ultimately leads to like the game theory of Bitcoin, where like, you know, if you're one of these big guys, right, like with like building out this CBD system, or, you know, you're one of these banking cartel families that are, you know, worth billions of dollars that nobody knows, or maybe hundreds of billions, and you know, you have this treasure chest of assets that you've been sitting on for generations. Like, while you're building out the CBDC, or while you're trying to implement this next system, do you go buy some Bitcoin to cover your butt, like, and not tell anybody? And like the answer is probably yes. Like, you know, like you don't know if I'm buying Bitcoin, and even if I tell you I'm not. And that's the beauty of it. It's like Bitcoin's for enemies. And so ultimately, like the game theory is like, you can't insulate yourself from money, from others holding money that's harder than your own, right? Like that was one of my favorite quotes from the Bitcoin Standard. It's like, you cannot insulate yourself from others holding money that's harder than your own. And if you don't understand what that means, then listen to it again or go read up, because that's really important. And like history has shown that. You know, like there's a reason that gold won in the free market. It wasn't because someone was like, hey, we're using gold now, guys, instead of silver or instead of copper. It was like, no, gold won because it had the best monetary attributes. And so like, I think with the CBDC, like, does it get rolled out? Probably. But is it a big power struggle and a mess? And at the same time, is Bitcoin monetizing with this Trojan horse Lightning Network that's going parabolic in use in public channel capacity right now? Yeah. And like, that's super exciting.
Yeah. I always look on 1ml.com. Is great because it shows you number of nodes, number of channels, network capacity. You know, it's almost at $89 million and right around 2,100, almost 2,200 worth of BTC of network capacity. Just, I mean, the Lightning Network charts are parabolic straight up. It's just awesome to see. Stick. It's awesome to see. Everybody's talking about Bitcoin price and the fiat terms and all that, but watch Lightning. I think you watch Lightning more than you should. You need to be watching Lightning stats versus just the fiat price of Bitcoin. But I know it's another topic, but that's something I always want to watch. So look up 1ml.com, which is just a great way to look at, you know, the trends of what's being built on top of Bitcoin. Obviously the base layer is obviously very important, but just be aware of, you know, side chains and what's being built on top too.
Totally.
Yeah, I think it's really important. But you haven't, I said this on the podcast, like you have to make a decision very soon. I don't know how soon, like you said, I don't know how it's rolled out, when it's rolled out, but there's going to be a digital dollar or whatever it's going to be. And you're going to make a decision. Is that my money or is Bitcoin my money? You're going to have to make a decision literally. And it's hard to bring us up in random conversation with people because you never find the right time to talk about CBDCs and, and, you know, what money will you choose? You know, so I always try to find, I don't know, I try to find different ways to tell people that you care about these things, because we all know it's coming, like we really do. And it's like, and it's just, you know, sometimes you're very fortunate and lucky to have someone in your life or just someone to like tell you a concept or something or give you a book or I don't know, I think if you have gotten Bitcoin and just understood it enough of the last couple of years, you're very fortunate, just in my opinion, because you have decided that it's the best money available to you to hold your value to where no one can manipulate it. In the end, that's just how I see it. And I don't see that changing. And just more and more people over time will understand it. And that debunks this whole, you know, Bitcoin's so volatile, you know, but that's in fiat terms is because it's in price discovery. People, the information, we talked about this before we jumped on here, but the information asymmetry is closing and more people are starting to understand And just like Bitcoin Standard, like you said, one of the biggest takeaways is human beings will migrate to the best money. The end. Like I don't have any, but fiat money, if I could like, pull it out and show it, right? Like fiat money, it hasn't always been money. But most people think that's always been money. Paper money, no, it hasn't. Seashells was money. Salt was money, right? So humans, you'll migrate because you'll be forced to. You'll be forced to migrate to another money in history. I'm not a history buff either, but if you just know enough, human beings have shifted from one money to the next because one, they decided to, or two, they were forced to.
Yeah, I've said a couple times, in like maybe the wrong setting because it comes off as like hostile and arrogant. But I'm like,
I'm with you.
You don't have a choice to buy Bitcoin. Like when someone's being a real like, hardo or like pushing back or
fiat
or
bro, fiat bro,
Michael
Goldstein.
And we're like talking back and forth for a while, and I'm like, saying all this stuff about like why they should get into it and the tributes and all this stuff, and they're like, yeah, but like, dude, crypto doesn't interest me after like 10 minutes. And I'm like, dude, like I'm really trying to be nice here, but like you don't have a choice. And like the longer you have that attitude, like the worse you're going to be. And so, it could be 10 years, but like you'll remember this combo, like, and like hopefully you act because, it has pretty broad implications on you. Like, like in this monetization phase, like I'm 20 years old and like I switched my unit of account like, 2 years ago. And since then, like, switching unit of account like saved years of time from just switching my accounting standard to a different denomination. Saved years, right?
Bitcoin's
life
time
keeps
chain.
Getting cheaper for me. Yeah,
Bitcoin's like, time chain. The meme.
It's getting cheaper for me, right? Like life's getting more expensive for everyone else, but like Bitcoiners, like the house that I want in 10 years, well, it just got cheaper. It got a lot cheaper.
And sometimes maybe not, but if you have kids, I'm not saying everyone has kids, look to the future more or something, but I think you're potentially more apt to, because they're pretty loud. Kids are pretty loud. They're like, oh, I need to think about their future, and I got 2 young ones, and it makes you think about the future and about them. And it's where do you think the fiat system is going to be, in 50 years? And I mean, I can't even wrap my head around that stuff, but I can wrap my head where Bitcoin will be because we know where it's going to be. We know the monetary supply. It doesn't change. There's 21 million every 10 minutes. TikTok next block. Like we know that already. It's programmed, right? And it's the only thing like it. It's the only thing with absolute scarcity. So that's just something I just go back to. And especially if you're really looking future and if you're saving for someone else, your children that's younger than you, and even like, generations beyond that. But let's be honest, our society is very short-term thinking. It is what it is, but but to your point, you kind of have to be, that's the fiat mindset because it's the rat race of thinking short-term on the risk curve because the hurdle rate's 40%. And you mentioned it, don't give me the CPI crap that it's 3%. That's trash and that's garbage. And I'll say it over and that is garbage. That is not real inflation. That's a manipulated number to make you think it's only 2%. So you don't do anything about it. That's what it is, in my opinion. And maybe I'm wrong, but I say what I feel and what I think is right. It's a manipulated number so and they make the basket, whatever they want inside the CPI. But here's the money supply that increased 38% last year. That's real inflation. And are you making 38% on your value last year? Did you make 38% increase on your salary? Probably not. Maybe you did. Yeah. You know what I'm saying? If you're not past the hurdle rate, then you're going to be devalued as far as your monetary value.
Yeah. Time theft.
Right. Exactly. So anyway, there's a little bit of a rant there, but hey, I want to touch base with everybody else. If you have a comment or question, thanks for jumping on. We had a few comments there on Twitter. We were trying to get the feedback on LinkedIn to make sure everybody can ask a question, but thanks for sharing. Thanks for liking. I want to make sure I throw all the links to all your content to the conclusion of long-term debt cycle. It's a really good read. And just wanted to, so someone was mentioning about CBDCs. Oh, and Forge says we are so early. And I mean, and sometimes when I think about how early it really is. It's just really hard for me to wrap my head around this sometimes, like just how early, because I mean, you're studying on chain, you're in this every single day. I mean, this is literally what you do every single day at Bitcoin Magazine, as far as just putting this together. Have you thought about that? Like just what early means and how early we are. And one thing I will say, like I loved when you were on with Greg, and he said there's a rounding number issue with Bitcoin. It's a rounding issue. Like, and there's just this huge gap. So I think about just how early we are, and then I always think about how are just different ways I can help people understand it better.
Yeah, I mean, it's definitely super early, even when it doesn't like kind of feel like it. Like I in the U.S. or like first world countries, with technology that's kind of available. Like most people have probably heard of Bitcoin, right? But like, what percent of global wealth is in Bitcoin? And it's like less than 1%. It's like less than 10 basis points, maybe. Like, let me think. Like, yeah, it's like around maybe 10 basis points of global wealth. It's like 700 billion, and probably the total addressable market's like of global wealth is like 700 800 trillion of just financial assets and just like I guess like value, and that's really hard to measure, but I think global debt markets are like 300 400 trillion bucks, equity, real estate, all of that, and so I think even when it's like Bitcoin's up 1,000,000,000% since 2010, and it's like up 150% compounded annually over the last decade, and since 2015 or whatever you want to choose. You could have bought Bitcoin at like the 2017 top, and then like just barely sold, and you're doing better at the local bottom, and you're doing better than like investing in the S&P. So it's like it doesn't feel like you're early because of like the crazy performance and all this, but like no, it's so early. Like if the internet had an actively traded market price, what would that have looked like in 1999? Because like that's kind of where we are. It's like it's available, like people know, like most people, I think like there's like 100 million people that have like crypto or have a Coinbase account or like have an app that has Bitcoin on it, but like most people like the amount of like people that are actually like maximalists understand that the opportunity cost of everything is Bitcoin because of these game theoretic realities and inevitabilities about the most sound money, right? And just like it doesn't matter, like the amount of Bitcoin holders could not increase over the next whatever, and obviously it'll increase by a lot. It'll increase by a factor of 10 and a factor of 100, that factor of 1,000. But the same amount of sat stackers, if we just bought the same our same amount of disposable income every day for the next 100 years, the Bitcoin price would still go parabolic because of stock to flow and because of absolute scarcity. And that's just the reality, is that like if the price of anything else, if the price of any money increases, if the cost of it, well, more is going to be produced, right? Like when the dollar increases in value, when there's a super spike, well, what does the Fed do? The Fed prints a bunch of money. They do more QE. What happens when the price of gold goes up? More people mine it. What happens when any other commodity? What happens when the price of oil shoots to $100? Well, there's fracking, and they figure out more ways to dig up more oil. But what happens when the price of Bitcoin goes up? They spin up more miners, and that the share of Bitcoin that you can get for selling energy for it decreases because of the difficulty adjustment. It's like it's pretty mind-blowing to think about. Like, and so it's so unbelievably early, even if people understand it, because they're still, at the very least, there's still 100x in not just nominal value, but like in real purchasing power value over the next decade. And I think it's probably more than that. I think it's, like a 200, 300x, to be honest, over my lifetime, for sure.
And so one last thing, it's just exciting to use. I know this might sound foreign to some people, because there are 125 million people or so that own Bitcoin or something like that. It's called 100 or something like that, but not all are really using it. Not all are really using Lightning or running their own node and things like that. Like that's the minority. I do feel like once you run your own node, once you're connecting with peers on Lightning and things like that, and bouncing your own channels and doing those things, you just get closer to the network, or you just understand it so much more. And you don't have to be an ultra tech savvy person. You just have to put time into it. And one aside to this, and people don't like me saying this, I think, but people just don't want to do the work. And I'm sorry to say that. and this sounds mean or something, but people just don't want to work and learn and go out and because anyone can learn it, in my opinion, to the point of like, opening a channel, running your own node, especially now with like service like my node and Umbrel. Like you can run your own node. You can validate the supply of Bitcoin compared to how much you own. Like you can do that, but you have to put in work and you have to put in effort to understand it. But I just think, potentially we've been conditioned to just listen to whatever else, do what everyone else does or whatever, so Bitcoin is somewhat, although it's getting different, throughout every single day, but Bitcoin's going against the grain and making you go out and do the work because you're being taught something totally different in the fiat world.
Yeah. I've talked to a bunch of people and, talked their ear off about Bitcoin or whatever. And even like before I like was down the rabbit hole, I heard people talk about it and was doing my own research and listening to videos. But like once, like until you've actually, taken sats and sent it to an address or, like sent Bitcoin to your own cold storage or, recovered a seed or just like, I guess like, like you're talking about experiment and then like actually be like, wait, I just sent value over the internet that no one could stop or do anything about. It's like, wow, this actually is pretty cool. And that's just like, that's just like a pretty first step. But I think a lot of people have like, you can talk all day about verifying supply and nodes and addresses and, card caps, and like their eyes just glaze over, but then when you're like, hey man, like take this, send it. And they're like, oh, but what app? Is it PayPal? And you're like, no, it doesn't matter. It's like, it's just Bitcoin. It's the network. And nobody owns it and nobody controls it. And like, that's a real eye opener for a lot of people, especially out of the Western world. Like I think from my personal experience and anecdotally, like I've talked to probably 1,000 people about Bitcoin and like everyone out of the US, like some people get it. Some people really get it. Some people are orange pilled. Most people are like, that's cool, man. You work for Bitcoin. That's pretty cool. Thanks for telling me. But like, you talk to someone from like, Venezuela or like you talk to someone from, Africa where their currencies collapsed and you're like, yeah, man, nobody can touch this. You can store it in your head. Nobody can print it and it's yours. And like their eyes, get big and wide. And it's like, wow, like this is life changing. and I think
it's saving them. It's saving them. And how dare these fiat elitists come out and say what they do about it when this technology is saving lives? It really burns me up that all these things, and it's really saving lives because but in the end, they don't care about those people. They have their own.
And I hope I'm wrong, but like, I think there's going to be a moment in time over the next decade, or at least in my lifetime, where like people in the West, like first world, US, stable currency, etc., like get burned in a huge way. And like, at that point, Bitcoin's not like an option, like, right? Like that's like during, the late stages of like hyper Bitcoinization is like, unfortunately, it's probably currency collapsed. And is that Bitcoin's fault? No. Bitcoin's gonna be blamed. Like those nasty Bitcoiners destroyed the economy. And like, that's obviously false. But like, there's gonna be a point where there's some sort of collapse in the dollar, whether that's faith or supply or both. It's gonna be probably both. But like at that point, Bitcoin's not like a choice. Bitcoin's still a choice right now. Right. And it's like, you're incentivized. You have a massive incentive to adopt this early if you understand. But eventually that's not going to be the case. And it's going to be like Bitcoin is if you want to live, if you want to eat, if you want to have a house over your head, you need Bitcoin. Because I don't accept dollars. Like I don't want US IOUs. Like that's just the reality.
Yeah, and it's a bottoms up. That's one of the beautiful things right now that I'm just like a trend you're looking at is the bottoms up approach. It's third world countries. Like those people are getting it more because they're forced to, like we said earlier, money has changed over centuries. And some people had to change their money because they were forced to. And people in third world countries, for example, and what El Salvador did, making it legal tender, it's like they're recognizing it early and they have less to lose to leave the fiat system. So they do it first, and obviously Bitcoiners, we all get this, but like in general, like people, they hear all this stuff, they don't understand it, but that's what's happening. They have more incentive to leave the corrupt fiat system because it's already crushed them anyway. And there's a better system over here. So they're moving. And so it's this bottom up approach So, and I think it's how it plays out. It doesn't play out perfectly like that, but in the end, there's more awareness if you're in those places than there is here, because there's a, you know, there's a kind of an elitist, obviously, thing here in the U.S. that, we've got the dollar. We don't need that. We don't need anything else. So you're in almost a better situation if you're not depending on it.
Yeah, 100%.
So, well, cool. We'll wrap things up. I want to thank everybody for jumping on. If you're watching the replays, what I'm going to do, I want to have all Dylan's content, all the links. I did want you to talk about the deep dive newsletter that recently started with Bitcoin Magazine. What is that, and how people can find that?
Yeah. So we started a newsletter back in what was it, May? It's a premium markets newsletter. Just we kind of put together global macro derivatives and on-chain stuff. If you want to give it a try, it's maybe a little pricey for some, but if you want to try, you can use code BITS, BITS, for a free month trial. Just test it out. If you don't like it, that's cool. I totally understand. You can unsub. But we put out about 20 pieces of content a month, and then just released a monthly report, which is pretty long. It's like 4,500 words and like 30 something charts and stuff. So, and we got the full suite of like Glassnode and Skew and all this stuff. So pretty high quality data. For anyone that just likes to get an inside look at the charts and what's kind of happening under the hood of the markets. And for most people, I tell people, like, completely honest, like, for most people, just stack and hodl, and don't pay to look at on-chain stuff if it's gonna mess up your stack. But for some, there is a demand for just kind of seeing what's happening, whether you want to trade off that or not. Your call. But so that's kind of what I've been doing at Bitcoin Magazine recently. What else? Yeah, I think that's it.
Very cool. And I'll put the link to the conclusion of the long-term debt cycle and the rise of Bitcoin. It's a great piece. Love all your stuff. You got a lot of content out there, man. And then I've got you have your own page on Bitcoin Magazine too. That's got everything I think you've written as well. So I'll make sure to have that posted and people go through that. Just keep doing what you're doing, man. Love all the threads. Love all the content. I know a lot of people appreciate what you do, because some people may not realize how much time you have to put into some of this stuff. So I appreciate your time jumping on here. We'll clip this up, put this back out. I want to thank everybody for jumping on. And Dylan, you have to jump on again, man.
Yeah, Chris, really appreciate it. And let me know how those ventures go with Lightning and all that.
Absolutely. All right, well, take care, everyone. We'll see you on the next